Valeant, the embattled pharmaceutical giant, is giving investors a bit of a headache this Monday as the company canceled its earnings call and withdrew its guidance. Valeant stock is down nearly 9% this morning. And here with analysis is Wall Street Journal Heard on the Street columnist Charley Grant. Welcome, Charley. Great to have you with us. So you, like so many other people, were all set for this earnings call this morning since you cover Valeant. What happened last night?
Well, Valeant put out a press release making a host of announcements, one of which is its CEO, Michael Pearson, who has been on leave with a case of pneumonia, is returning to the company effective immediately.
So that's good news.
Absolutely. That's something that investors wanted to hear. His status has been a question for months, and he has been a very popular CEO.
But his job is going to get split up?
That's right. He will no longer be chairman. Valeant is separating the role of chairman and CEO effective immediately, and the interim chairman will be staying on board as a full-time one.
Okay, but why no earnings call? What's the deal?
Well, that's the real question. Valeant had said on Tuesday last week that it would be hosting an unaudited conference call, meaning that its external auditors have not signed off on full-year financial results. But investors were still expecting to get some kind of commentary from the company today about how the fourth quarter went and what they were expecting to see in 2016. So just as scary for investors as the fact that they pulled the earnings call is they withdrew previous guidance.
And bring us up to speed on some of the challenges that Valeant has been facing recently.
Sure. Valeant has been embroiled in a bit of a controversy surrounding a specialty pharmacy that it had purchased an option to acquire and had not disclosed this relationship in their financial statements. The end result is that there are possible changes to past financial results coming, and Valeant needs to replace this revenue somehow. And so there are short-term challenges surrounding the financial reporting, but there are also long-term challenges about how Valeant can generate growth if its old corporate strategy isn't working anymore.
So does Valeant's core stable of high-performing drugs, does that still stand? Is that enough to get it through?
Well, Valeant has made its bones by selling drugs, older assets, and managing to turn rather impressive sales numbers from those drugs. But there are signs that that game is going to be harder in the future. Its top-selling drug, Zifasan, which is an irritable bowel treatment, there's a patent challenge being filed by Actavis for this drug. In theory, this means that Valeant could face generic competition in the near future. That's not right away. I mean, there will have to be legal challenges, and Valeant says they will defend their rights vigorously. But that's a drug investors are counting on. Valeant spent about $10 billion to acquire this thing last year, and now there are challenges surrounding that.
Absolutely. So right now there's a lot of murkiness. What is it that investors need to hear, that they want to hear to quell their uneasiness?
I think the most important thing in the short term is to hear updated financial guidance. It's very alarming to project 21% revenue growth, which is what they had said back in December and reiterated in January at the JP Morgan Healthcare Conference. And now that's uncertain. So investors, until we hear more from them about just why the change and what they expect 2016 to look like, there's going to be a lot of mystery here.
Right. Seems like no news in this case is not good news.
Yeah,
right?
No, ignorance is not bliss in this situation for investors.
All right, Charley Grant, thank you so much for that.